Okay, hello everyone, and welcome to the Hoddercast. Today is January 29th, and we have a very esteemed guest, attorney William Restis. Or do you go by Bill or William? I never know the right,
You
that's why I
know,
call you Mr. Restis.
that's funny. People who know me well call me Billy, but that doesn't happen in the office, so it's probably Bill. Um,
Okay.
yeah. But it's funny because I'll get these phone calls from my office sometimes where it's like, "Is Billy there?" And then I'm like, "Okay, this is not a business call." So, yeah.
Nice. Well, maybe can you give us a little background about your firm and how you got involved in the Bitcoin space?
Sure. So my firm is relatively new. I came from a boutique securities class action firm that I was at for about 13 years. And I spent a lot of time at the last firm doing securities class actions, and a lot of them dealt with, at the end of my tenure there, um, market structure issues where we were really dealing with how securities fraud could be baked into the software that runs financial markets.
Oh,
And
I read that book, Boomerang by, is it Michael Lewis? I
it
think
might have been that book. There was another one, and it
Yeah,
came out.
he did
And
a
it was
couple.
about dark. I think it was called Dark Pools. So this was a lot about how exchanges were routing their trades to various um, market execution venues, order execution venues, for preferential pricing instead of trying to get the best execution for their clients. So I left in the middle of that. I took a long sabbatical. I had a couple of good years, so I took a long sabbatical in 2016, and I just did a really deep dive into Bitcoin. It was something that it came on my radar when it spiked back in 2013. And then, I was so busy like everybody else was, it crashed and I said, oh, there's the end of Bitcoin. And then it popped back up. And I really became just incredibly fascinated with the implications of Bitcoin specifically. And then I dug into some securities. One of the first securities class actions in the crypto space, the Tezos case, and I'm one of the plaintiffs' lead counsel. Not plaintiffs' lead counsel. That's a term of art. I'm on the lead counsel team, so I'm not the boss of that case, but I'm on the lead counsel team in Tezos. And then I have another case against CoinBase, a class action against CoinBase that deals with Bitcoin that was transferred to people by email and was never claimed. And both of those are up in the Northern District. And when I got into these cases, people started to contact me and say, hey, I'm starting crypto projects. You seem to know how to sue people, so help me avoid the litigation and help me stay out of trouble. So that's really kind of how I got into it. And so it's the class actions, and I represent, blockchain projects trying to get themselves off the ground. I could say more, but I don't want a huge monologue here.
Hmm. Well, can you give us any updates on either of those cases, the class actions?
Yeah, well, they're both cases that I'm involved in, so I need to be careful about what I say,
Sure.
right?
Hmm.
The Tezos case, we've got some very good evidence. I think that it tends to be quite clear that this was marketing of securities for profit. So I can't go too
And
much into the
that
evidence.
one, it turns on whether people were making a donation to a foundation or, investing in an investment contract. Is that what the crux of the question is?
Uh, you, I'm hesitant to go into
Okay.
detail. So what I'll do is give you a case update that says we filed our motion for class certification a couple of weeks ago. So we're going to find out fairly soon whether the court thinks this should be a big case. And then a big case meaning all of the claims of people who want rescission and damages who invested in the Tezos ICO get to be in one litigation, or whether it has to go forward as an individual claim from the named plaintiffs.
Mm-hmm.
And that's, nuances omitted. I'm going to say that, with respect to everything I say today, is nuances omitted. There's a lot more detail than that. And then the Coinbase case, the judge I think it was late December, denied the motion to dismiss. So Coinbase was basically saying that, well, even though people transferred Bitcoin out of their account to third parties, and they never claimed it, Coinbase was saying, well, nobody really owns it, and Coinbase effectively gets to keep it. And I don't think that sat very well with the judge. I don't know how that's a litigation position that Coinbase is going to be able to really to win with. They were saying that nobody had a property interest in these Bitcoin, and so that effectively means Coinbase gets to keep it. The judge didn't buy it, so the case is proceeding.
I gotta read that. When we did the legal panel with Drew and Justin and another attorney, Anessa, last week at the Synapse Summit, and Justin, the attorney with Carlton Fields, he said the same argument around, do you even own your Bitcoin, or is it just you own the hash? And then I think that's the crux of the Wyoming new legislation. They're trying to get something saying you actually own the Bitcoin, so that if there's a UCC-1, full property lien on a business or something, that wouldn't extend to the Bitcoin. I thought that I hadn't been following that side of things, like the ownership of Bitcoin, that much, but I just thought if you own your Trezor, you own the Bitcoin. Like, it doesn't seem like that nuanced of a thing that everyone's trying to make it into this big property dispute.
Well, I mean, that's really what it's about, is what are the property rights in a Bitcoin? I mean, there's a lot that can be said about it, and I'd like to say about it, but again, I'm counsel in the case, so I need to be careful. Other than to say, I think Coinbase's theory of the case that, if that people who had this Bitcoin transferred to them have no property interest in the Bitcoin, I think that's a really spurious and difficult argument to make. And we'll see how it goes. They're sticking with it, even though the judge didn't buy it the first time.
Well, I wish you all the luck in that one. It sounds like you're on the right side of things. So what do you consider one of the most interesting areas for legal analysis at the moment?
Well, I thought for a while that this question of whether ICO tokens were securities was something that was fairly settled. Everyone seemed to agree on that. And then just this week, we had Kick's attorney file a Wells submission with the SEC that really wanted to take issue with that and try to define the proper scope of what a securities offering means in the context of an ICO. And I thought the submission was very creative and very well done. And I'm curious to see where it goes. Because what we really haven't had yet is a defendant fight back against,
especially one that hasn't done some egregious violations. Like the one that is fighting back right now, their name is escaping me, but they said they had approval from the Blockchain Exchange Commission or something like that, and the SEC. Like, they made a lot of false statements, and I think they're fighting back in California, where they won that that little motion around the receivership issue. Do you know what I'm talking about?
Yeah, it's the Blockvest case, and it's actually here in San Diego. It's fascinating because I actually have some litigation that's going to be related to that. But what I can tell you is, it seems that Blockvest was created out of thin air by this gentleman, and none of the representations were true. So this
it's really odd that they're fighting it.
Yeah, it's odd that they're fighting it. I mean, if you look at the court filings, the defendant's attorney asked to be removed from the case because their client was asking them to do things that would violate Rule 11. And, when the attorneys wouldn't file it, then they were trying to file it themselves. So it's a really, I I don't expect the defendants are going to get very far on this. It doesn't bode well.
Mm-hmm.
Plus the other things that I can't talk about that I've learned about, these particular individuals that will be coming out in litigation soon.
Sure. But this other one, the Kin or Kick, they're a Canadian company. They filed Reg D and raised $50 million on a pre-sale from accredited investors, from what I understand. And then once they did what they called a network launch and got the platform functional, then they did a regular ICO allowing anyone to invest, but only up to $4,400. So no individual could buy more than that. And they sold it to over 10,000 people. But they're saying that their Kin blockchain is more active than Bitcoin, and they're linking to some site. But I have some misgivings of whether that's true, or are they sending themselves a lot of transactions that's creating some of that volume, in which case it would be fairly I guess that is the volume, so it's not a lie on the letter, but it's not the spirit of the truth either, if that is what they're doing, is sending transactions back and forth to themselves.
I don't really know if that's the case. When they talk about, and I read the Wells submission, and the reason I did that is because their counsel is the same counsel, one of the counsel in Tezos. So, okay. I was curious what their attorney had to say about this.
Is he defending or?
He's defending, yeah.
Okay.
So, so one of the things that they're saying about the Kin currency is exactly that, is that it's a currency, and that a currency is explicitly exempted from the definition of security under the Securities Act. And then there's a ton of very detailed fact-specific arguments in that Wells submission that they're trying to take it out of the Howey test, saying, making arguments like, well, I don't actually remember what they were. I read it very late at night the other day, laying in bed on my phone. So I don't remember all the details. But that's really what we're dealing with here. Is one of the things that they were saying is that this is a facts and circumstance test. Even the SEC's Dow report said that you have to look at the facts and circumstances of every case. And what they're saying is, look, we haven't got a lot of the industry, hasn't got a lot of guidance from the SEC in order to determine what those boundaries are. So that's the type of argument that I think they're going to make, and saying, I think one of the chief arguments was you shouldn't regulate by enforcement.
Mm-hmm. And
but
what do you think was their motivation for publishing this publicly? Because it looks like they're still waiting on 4 SEC commissioners to make a decision whether or not to even initiate the action against them. So
I don't know, public opinion, perhaps. Maybe they will be getting other amicus type submissions in response to this. I don't litigate in front of the SEC, so I'm a little bit more, the processes are a little bit more opaque to me as to how that would work. But, there's a lot of talk about it in the industry. There's a lot of people, the Twitterati have a lot to say about this issue specifically. So that's probably why, to try to get public opinion on their side. I don't know whether it's a good idea or not, but.
It's just so much money that was raised, $100 million in total. It's not like one of these, small ones with 20 million. So I guess it's, there's a lot on the line of whether, if it goes in their favor, or they're told they have to give the money back and do, register as a security like AirFox was requested.
Well, they did register as a security, right? They registered as a Reg D offering, right? Mm-hmm. So how is it a securities offering to the accredited investors pursuant to Reg D, and not a securities offering to public investors? I don't, like I said, I read the submission. I thought it was excellent. They were using what they had very well, very cogently. And I suspect it will prove to be a template for other counsel trying to make similar arguments. I think it's Patrick Gibbs was the counsel at Cooley, and he did an excellent job on the submission. Mm-hmm. Whether it flies or not, it's like, the Wright brothers. Every time you go and you into one of these new areas, we don't know whether the plane will fly until we attempt to fly it.
Mm-hmm. And also, it's a question of, how do you go from being a security to not a security? But if you look at Mr. Hinman's speech, and they, brought that up quite a bit in the letter, they kind of follow what he carved out as the template for Ethereum. Don't look at the ICO, just look at it in its current form. And if it's sufficiently decentralized, then it's not a security, it's a commodity. Now, the CFTC looks like they're pushing back on that a little bit with the request for comments to, they haven't agreed that Ethereum is a commodity yet, but I think that's coming, like the submission's open until February 11th. But following that logic, if they genuinely have more transactions and more use than Bitcoin and Ethereum, then why wouldn't they be considered sufficiently decentralized? But
I look at that statement about it could be a security at the beginning and not a security later as dealing with the distinction between something that is offered as part of a fundraising event versus the actual functionality of the token once it's out in its ecosystem. I don't know how you can divorce the fundraising event from the securities laws. I think that's a very difficult position to take. That's what I think they're going to have. Kick is going to have to take. And like I said, their submission was very well done. We'll see what the commissions. First of all, they have to have a vote to bring an enforcement action. The Wells submission was simply to say you better not bring it, and they were trying to create enough doubt so that the commissioners would say, you know what, I don't know whether we can win on this one, to avoid litigation. But assuming that the commissioners do vote in favor of an enforcement action, then they're going to have to convince a federal judge that their position is that Kick's position is the correct one.
Mm-hmm. And by making it so public, it doesn't give the SEC much room for retreat, because now everyone's seen it. If the SEC, takes a step back and says, okay, we're not going to prosecute this because of all the, the Wells letter was convincing, then they really open the floodgates for everyone else. So
well, maybe, but I think I hope the regulators act that way. I mean, you don't want an SEC that just says, man, we boxed ourselves into a position, so now we need to take the position. If they're wrong, then they shouldn't force companies to defend against things that don't squarely fit within their administrative purview. So, but again, I think the SEC has a strong basis to say that it's the fundraiser is the securities contract, the fundraiser is the investment contract. Whatever the functionality of the token is at a later date is a totally different question.
Mm-hmm.
From my perspective. We don't have any decisions yet that say that, but that's my opinion.
Yeah, I would agree. I wonder if they had collected their $50 million from the initial sale using the Reg D and then airdropped a different token, if something like that would have been come to a different result, but it would have cost them $50 million to do it that way instead. So
right.
Anyway, it'll be interesting to watch what unfolds from this.
Yeah, so that's my number one issue. Sasha, let me close my blinds because I feel like I've got the halo on my face. I'm not a podcast expert like you are.
Yeah, I've got this ring light thing I put behind the computer now, so it kind of bounces the window out.
Because my office is set up like a living room. I hate to sit at desks. So I've got everything on my laptop, but that's a little bit better. People come to my office and they're like, "Where do you work?" I'm like, "I work everywhere." On the couch, sleeping sometimes.
Yeah, that's the beauty of working off a laptop.
That's right.
What do you think? So, what do you think is the implication then for crypto exchanges? Like, if it turns out that this is a security, and as we've kind of seen, a lot of these things are securities. Do you think there's going to be more action against the exchanges that are selling these unregistered securities?
Well, going back to the Dow report, it was very clear that if a if an order execution venue is trading securities, then they need to comply with the Securities and Exchange Act. So I think that this is a problematic thing for and I use the word exchange sort of in air quotes because exchange is a term of art, right? And you can't. So, for example, you can't call yourself an exchange unless you're registered with the SEC and approved by the SEC as an exchange, right?
Right.
So I kind of like, I don't like to use that word, but that shows exactly the type of regulatory environment that we're operating under. Is that if you are matching orders on an order book for securities, then you better either be registered as an exchange or you better be a broker dealer and qualify as an exemption as a ATS. And there's a few of them that are. So I know. I think it was. It's not securitized. It was Open Finance just did their first trade on their platform. I think last week. T0 just did their first trade. So I think what we're going to see is
Does Coinbase have that ATS?
They might.
They
They
must
might,
have
but
before
right
they started
now,
listing all those other coins.
well, if you look at what if you look at what Coinbase, for example, is listing, none of them are ICO tokens except Ripple. But I haven't been on Coinbase in a while, and I don't think there's Ripple. I think there's Bitcoin Cash, Ethereum.
Well, I mean, Ethereum was ICO'd, but no, they launched another like 20 Brave and all these other coins that I think some of them, I'm not sure either, so I don't want to
Then
say
I would assume that Coinbase has received their broker dealer license or acquired an entity that had a broker dealer license.
Yeah, I think they must have too.
Yeah.
Mm-hmm.
So, but what I think what's going to happen is we're going to see these, we're going to see quote unquote exchanges shut down, and we're going to see the liquidity migrate to broker dealer ATS platforms, or they're going to go offshore, right? I mean, there's a bazillion exchanges listed in other countries that don't have the same issue.
Mm-hmm. But I was just reading about it last night. There's a tax consequence of holding your crypto assets on an exchange offshore. You're required to file an FBAR if for anything over $10,000 that's held in a foreign-owned bank account, and they consider exchanges to be in that category. And if you don't file it, it's a $12,000 penalty.
Well, that's, the plot thickens every day.
I know. It's crazy.
Yeah, and I think that's probably one of the places that we need the most relaxation of regulation is in the tax code with respect to crypto assets. Because I think that those regulations you were just citing deal with, your Cayman Island bank account and issues of that nature, and it's really a square peg in a round hole. Maybe not. I don't know. I hadn't heard of it until now, but it's, I learn something new every day in the crypto space.
Exactly. Yep. And what do you think's going to be like? Do you think there's going to be a lot of demand for the security tokens?
I think eventually we're going to get to a place where a security is a security token, right? Because it's going to become so ubiquitous that I've even, and I think the founder of Open Finance said this the other day, is that it's going to be the benefits of tokenizing a security are so great that the SEC will eventually require that all securities are tokenized, and I think that that's a very fascinating perspective because the securities trading and issuance industry was created in an analog world, and it's just not suited. So it hasn't adopted all of the technological advances that a lot of the rest of the world has, and so it's ripe for disruption. But I think that there's, I deal with projects that are trying to, a year ago they wanted to not do an ICO. Now they want to do an STO, but there's issues with that. And I think one of the main issues is, no one is yet saying, I'm going to pay a price premium for an offering because it's tokenized. So there was no, I want to say like priming the pump, right? Like there's no water flowing through the pipelines of the STO market yet, so that any founder that wants to raise capital that way has a sufficient incentive to do it. So when clients come to me and they say, well, we want to raise money, we want to do a Reg D offering, we want to tokenize, I haven't actually gone through one yet. I got very close in one instance, and we talked it over with the client, and they wanted to do a regular offering because, the benefits are it's pregnant with benefits, but that, it's hard to say that there's benefits for any specific issuer to do it today, right? Instead of a year from now or 2 years from now.
Yeah, and I think until we see, because there's that requirement of the 1 year lockup, and right now as of last week now, at least there's a platform, T0, but before that there was no platform for them. So it's very difficult for someone to want to undergo that process, not knowing if they're going to be able to sell the tokens anywhere, and very difficult also to raise money from people when they don't know how they're going to unload the tokens if they ever want to. And still the tokens are not always representing an ownership interest in the company. There's still these, there's the company and then there's the tokens, and there's not really a link where the profit flows to the tokens. And I think that can be built into the security token model, but it's not necessary. Doesn't have to be. You can still sell the tokens that aren't really connected to the company.
So I think that's right, Sasha. But if you think about it, if you're going to do a private offering under, let's say, Reg D, there's no market for your tokens anyway. It's a very illiquid market. You still have the lockup period. You have transfer restrictions on who can own it, the type of person that can own it, whether they're an accredited investor or a qualified investor. Who can own it and who it can be transferred to are also dependent on, the location of the buyer and the seller. So what's good about a security token is that there's all of these restrictions in the law about what you can do with a security and how you can trade it. Okay. What the security token model allows you to do is to take those rules and regulations and build them into the smart contract that is the security token, so that the laws are self-executing, right? So for example, like if you have a private placement offering of Sasha Co. or Hodder Co., right? And you want to, and you're not allowed to sell it to anyone under Reg D Rule 506.
Okay, yeah.
But let's say you pick a particular exemption. Now there are a list of rules that are necessary for you to comply with to sell your shares to people. So let's say I'm not an accredited investor, or I'm in the wrong jurisdiction and I'm not allowed to buy them. When I go to invest in your STO, the system would kick me out and would say, Bill, you're not a qualified investor, you're not an accredited investor, so I couldn't buy into it. Okay, so it makes sure that everyone who is subscribing to this offering has the necessary qualifications to do so. Then what you're able to do with the tokenization of the offering is you can build in voting rights in the smart contract, dividend payments. So everything that an attorney or a company has to do with managing their capitalization table, who are their investors, how do we pay dividends, how do we disseminate updates of information, that all gets baked into the smart contract. And then when you go, let's say the lockup period ends and you go to sell it, you're able to, the smart contract again knows what type of offering exemption that you did your offering pursuant to, and it says, okay, now you can't sell it. You can only sell it to other accredited investors, or if you're in a limitations on jurisdiction, you can't sell it to somebody in the state of whatever, right? Mm-hmm. So all of this is self-executing. So the benefits of tokenization are massive. I mean, it's just to give you an example, and I think that I've used this before, is that currently for publicly traded equities, if I own a share of Apple, I don't actually, it's not like Bitcoin where you send someone a Bitcoin and it goes into my Trezor, and I have a identified share that belongs to me. These shares in Apple and publicly traded companies, they're held, quote unquote, of record by an entity called the Depository Trust Clearing Corporation. And so what happens is your broker, let's say Schwab and Fidelity and all of these, they execute a million trades of Apple a day, and instead of transferring the individual sales, they net them out. And Fidelity would say, I had 1 billion shares sold to Schwab, and my clients bought 500 million shares, so there's a net transfer, and so that net transfer is reflected on a macro level, almost like central banks, moving funds back and forth between each other. But what happens is those share transfers never net out properly at the end of the day, and so there's something called a failure to deliver list, where literally millions of transactions every day fail to settle because of this very antiquated process. So what we can do is we can build all that into the smart contract of the tokenized security. So I'm very, very, very bullish on the space. But for any particular issuer who's trying to do it now, you need to, and stop me if I'm doing a monologue, Sasha, because I have a tendency
No, this is fascinating. I'm really enjoying your insight into it.
Okay, so for any particular issuer, the real, what has always been the holdback for me is if I have a client that wants to raise $10 million, $20 million, $100 million, you can't just create a token and put it out on a website and say, it's open, now you can subscribe to this offering, because no one knows that it's out there, and no one is going to subscribe. I don't want to use the term no one, right? But it's going to have a problem getting the offering subscribed. Subscribe means people invest into it, and if I'm trying to raise 10 million, that I get the full 10 million. So what I have been more interested in is the STO platforms that offer not just the smart contract capability, but the ability to get the offering subscribed, right? Do they have a good broker dealer network? Do they have a long list of accredited investors or iBanks or family offices, or can they sell it? Can they get the client their money? Because the client is not going to be very interested in a tokenized share if nobody wants to buy the thing and they can't raise the money that they need to expand their business.
They need the Leonardo DiCaprios out there on the phone. They need the Wolf of Wall Street.
They need the Leonardo DiCaprios out there on the phone, right? So, or maybe not. And I think if we look years down the road, you're going to have platforms like T0 and Securitize that. So let's see how these. Let's talk for a second about how these platforms are designed to operate. So if they're dealing with these private placement securities, they're not public securities, so they can't be freely traded on an open market. They have restrictions on who can buy them, and the jurisdiction of the people who can buy them. So what they have to do is these platforms have to screen the investors, make sure that they're accredited or qualified or whatever the criteria may be, and then they will become the pools of investors to subscribe into these offerings. And I think, But in order to get the offering subscribed, you have to have a sufficient critical mass in order to do that. But we don't have the critical mass yet, so we're dealing with the brave companies that are stepping out to be first, and I think it's a little bit precarious to be first in a new market. And I don't know, for example, whether I recommend that to every client, even though it's the hot new thing to tokenize your securities.
Mm-hmm. And yeah, so I guess maybe this time next year we will have seen, 20 or 30 raises go through this process, and we'll see if it's successful. We'll see if the companies were able to generate a profit for the investors, if there was a liquidity enough that people can sell the tokens after their 1 year is up or not, and we'll have a lot more information. But for me, I think if we can get to a point, and I think we're far from that, where the tokens actually have some kind of dividend capability and profit sharing capability and ownership of the company, then it makes sense. But for these tokens that don't give an ownership right, it's still, what is the use or value of the token from a security perspective. And then there's also the issue with smart contracts that I think they're easily hackable at this stage. So there needs to be a lot more development on that side before this is a fully safe venture for people to be investing in certain smart contracts. And I know that Liquid Network just kind of made a new type of way to do a smart contracts through Blockstream, I believe. So I think that those ones will be interesting to see what they can build in. But
well, I think you raise a really interesting point about security of the contracts themselves. So, and I've dealt with that too, in terms of investigating the STO issuance companies that are out there. What sort of protocols do they have? So let's look at it as an example of what could go wrong. Let's say I am a company and I have 100 shareholders, and these shares are represented by 100 units of tokenized equity, right? What happens if my smart contract gets hacked and a thief absconds with 5 of my shares, right? I have to, as a corporation, I have a duty to make sure that that the contract can be unwound in a way, or that we can put the toothpaste back in the tube, that there's some method to fix errors in the smart contracts, because you don't want, when you're trading, when you're dealing with securities, you don't want a system like Bitcoin where the transaction record is immutable, right? Because then you can't correct for mistakes. So you don't, for example, you don't want full decentralization of your tokenized equity. You want to be able, as the issuer, to go back and make changes to the contract as necessary. So there's a tremendous, it's not the same, people who are in the crypto space and need to, or have invested in the crypto space, need to get their mind that the same things that are a benefit to a cryptocurrency are not necessarily benefits to a tokenized security.
Mm-hmm. Yeah, it's two completely different things. I guess this is more like the enterprise side of it.
Right.
Well,
right.
Exactly like that, I guess. And then what about research and rating agencies? I mean, if you look at the traditional stock market, there's so much information out there about each company, and each company is required to disclose, a lot of information as well. Do you think we'll see a big surge in companies trying to provide this service in the STO market?
I think that there's, you've hit on a key issue, and that is price discovery, right? So let's go back again and use the analogy of a publicly traded company. If I'm Apple or any publicly traded company, I have to do quarterly reporting, annual reporting. I need to give financial information. I need to give. It's a ridiculous amount of information. So what that means is that the marketplace is able to collectively digest the information, and you have price discovery, and the market works because markets function efficiently. There's this whole concept that markets operate efficiently because there's perfect information in the marketplace, right? That's a theory of corporate finance.
Mm-hmm.
I think we're going to have a problem here because, with the STO market, because if you do a private offering for example, under certain subsections of Regulation D, you don't need to provide any disclosures at all, right? So how are you going to, let's say I'm an investor in an STO that was done pursuant to a certain exemption under Reg D. There's very little information, if any, available about this company or about this entity or whatever, type of security we're offering. And so how do I go to sell my tokenized equity on the secondary market? How am I going to find buyers for this when there's no price discovery? So I think that this problem is going to expand exponentially when you start to get hundreds and thousands and tens of thousands of offerings out there. So for the average investor, I think that it's going to cause problems for where do I allocate my capital? I'm an accredited investor. There's tens of thousands of STO tokens on, let's say, T0 or Open Finance. How do I know which ones I want to invest in? But then at the same time, I think that's going to create arbitrage opportunities for sophisticated investors. So you're going to get entrants into the marketplace I think you're going to get like VC funds and private equity funds that are going to come and arbitrage this information asymmetry because people aren't going to really know what these tokenized equities are worth. And so there's going to be so at the same time, it's going to be an incredible barrier for selling these instruments. But at the same time, there's going to be an incredible opportunity because the market is going to be so opaque, right?
Mm-hmm.
It's so difficult to get real information.
And that's actually going to be an improvement off even the traditional Reg D offerings or venture capital financing right now. They don't have that kind of information available for a traditional private offering when you're not doing a tokenized security as it is right now anyway. So, mm-hmm.
That's right. It'll be an improvement, but it's going to be a fire hose to the face, of all of these different instruments that it's going to require a lot of sophistication to sift through and determine, the wheat from the chaff.
Mm-hmm. Mm-hmm. What do you think are some key factors that people should look for to make that determination?
Well, listen, you're going to want to, and this isn't investment advice. I'm not a investment advisor or broker dealer. So I need to be careful about what I say, but, if you've been in the crypto space, okay, and we've seen assets moon, right? And there's an expectation that you can create a token and based on nothing really or some potential of a project, it's going to appreciate in value. Okay, and I think the reason why that happened was because there's no price earnings ratio in crypto, right? There is no earnings to be in the denominator. So for example, one of the reasons why a company like Amazon for so many years was able to trade at very high valuations was because the company was operating at a loss, so there was nothing in the denominator, so you couldn't look at it and say, oh my God, it's got an insane PE ratio that's completely out of whack with historical valuations. And I think the same thing happened with crypto, is there's no denominator, so nobody really knows what it's worth. It's worth whatever we feel like it's going to be worth. And that is not going to be the case with STO instruments, is that you're going to have traditional financial metrics to understand what they're really worth. You're going to have very complete financial disclosures. You're going to need to have rights as shareholders, that you're getting equity and that you have, there's liquidation preferences, a million different things. And this all comes from corporate law and what the rights are of shareholders under corporate law. And so I think that what we're going to see is, these instruments are going to trade like stocks, or they're going to trade like bonds. I mean, you can tokenize a bond. So actually, that was one of the things that I did want to mention, is that I think that the bond market is far more ripe for an STO than the equities market is, because it's much easier. A bond has much fewer components to it and is much easier to sort of just crank them out and
way less liquidity, easier on the company. All they have to do is pay a bit of interest for, like, say, whatever time frame, maybe 10 years.
Yeah,
God,
exactly.
I wouldn't trust one of these crypto companies on a 10-year bond, but maybe we start.
Well, right, but it's not just crypto companies that are trying to do this. I mean, regular entities are trying to say, what's the next big thing? How can I get access to capital? But I think bond market is going to be the first to really blossom in this STO space.
Yeah. I didn't even know that it was a thing to do the debt tokens. And then I did a podcast last week with Lisa Chang, and she was talking all about the debt security tokens. And
it's just easier. It's the path of least resistance, right? So I think that one's going to blossom first.
Mm-hmm. And then if you look at, like, the American economy, I've heard a lot about this, IPO crisis or something. There used to be like 9,000 public companies, and now there's only 5,000. So maybe this, STO market can kind of fill that hole and help develop the I don't know, mom and pop shops, I guess, or, get more money flowing down to the smaller companies that are trying to start up. But
I think that's the promise. That is certainly a possibility, but I suspect that we're going to see the regulations change that in response to the STO market, because when you're talking about this public crisis, or this crisis for publicly traded companies, is that the disclosure obligations for publicly traded companies are very onerous, right? A 10K is extremely expensive to put together. You need audited financial statements. The directors and officers need to sign, these documents, and they need to basically put their reputation on the line. And if there's problems with the disclosures, there's securities class actions. I know all about this, right? And so I think that it is, what has been designed for investor protection has also, in some respect, become a drag on the economy. And the transactions cost from it are too high in a lot of instances, right? Depending on the assets and revenues of a company. And so what the financial markets have attempted to do is to avoid that by taking things private and bringing them into PE firms and VC firms. And that will, but what I think we're going to see is that as the STO market really starts to blossom, the SEC is going to want more disclosure from the mom and pops. And so I think we're going to get a change in what the disclosure obligations are. There are going to be more disclosure obligations for Reg D filings, and then hopefully some less onerous requirements for the larger companies. But I think if we look down the road 10 years, for sure, your Apple stock, everything is going to be tokenized. Dividends are going to be tokenized. A lot of the entities that are necessary in the securities industry now are going to be disintermediated, and they're going to be gone.
Wow. That's quite the outlook. Yeah. I think you're probably right, or I hope you're right. Then we're in the right industry right now. Right. Mm-hmm.
It's a big wave.
Yeah. I think, we've kind of covered most of it, but one quick thing I wanted to ask you was about the Reg A+. And I think kind of what you just said there in a summary is maybe the A+ is the offering that will kind of meet all that, because it requires the SEC to approve it before the offering can go forward. And it doesn't require accredited investors, but it has all kinds of limitations on how much each individual can invest based on their income. Like they can invest around 1,000 to 2,000, depending on if they earn over 100 grand. And then it requires audit. I don't know if they have to be audited, but it requires financial statements to be submitted with it. So I think it's kind of a happy medium in there between Reg D and a full IPO, but the SEC has not approved a security token Reg A plus yet, but maybe that kind of would be the next step.
Yeah, I think, I don't think that the SEC doesn't want to approve any Reg A offerings, A plus. I think what they're trying to do is, so there's forms, right? If you go with and do any kind of registration with the SEC, they have filing forms, and the forms have, a list of 10, 20, 30 different items that have to be, categories of information that have to be provided to the SEC in detail. And I think the reason why we haven't gotten one approved yet is because the issues that relate to a tokenized security are a little bit different than the standard items that you'll see on the SEC forms. So, what I think is going to happen is someone is going to come along with great counsel, and they're going to over disclose to the SEC. They're going to provide a lot of information that, for example, isn't required by the SEC forms. Like, for example, the mechanics of your token. How is your token going to deal with voting rights? How is your token going to deal with dividends? How is your token going to incorporate all of these restrictions in the securities laws into the smart contract? What kind of auditing are you going to have over the smart contract? What are you going to do with, so all of these things that are not required, I think are going to have to be explained to the SEC, so the SEC knows that the offering not only complies with Reg A plus, but will satisfy the greater umbrella of investor protection. And that goes beyond the minimum information that's required by the form.
Mm-hmm.
I think that's my best guess, because it's not apples and oranges. It's, there may be two types of apples, but one has very different characteristics from the other.
Mm-hmm. Yeah.
Needs.
That's a really great analogy. I can picture, the ICOs with the scammers are like a wormy, like a brown apple that's, half rotten. And then there's some nice, beautiful apples like.
Maybe. And I think I'm looking at it more like a traditional Reg A plus is one type of apple, and an STO is another type of apple. They're trying to accomplish the same thing, the same type of capital raise, but there are different issues inherent in the various offerings that need to be taken into account. And I think that the SEC is going to want to know about if it's going to improve, this brand new phenomenon, which is a tokenized security.
Mm-hmm. And I think it's probably going to take some lobbying or like some increased education to move to that spot, and maybe some trust in someone that can do the smart contract auditing. Like, I know there's a company called Hosho. I'm sure there's some other ones out there, but if they give it a seal of approval saying that this smart contract does what it says it's going to do, because I think that's where, if I were an SEC looking at these Reg A pluses, I'd say, well, I don't have the capability to know if this smart contract has integrity, and I don't want to approve something if it's possible that all the money gets stolen. So
yeah, I think that's a real issue, and that's probably what is going through the mind of these people that are reviewing proposed STO Reg A plus offerings, to the extent they're still being submitted. I'm sure they are, but it's a very expensive process. So you don't want to submit your Reg A plus paperwork and have it declined or rejected. So I don't really know how many people are doing it until they get the first one.
I think it's like the ICO boom for companies last year. It's that space for attorneys this year in submitting these things. Well, that was an overstep to say that, but I think I wouldn't feel comfortable submitting one until one of the ones that's built up in line is already approved. Otherwise, it's like taking a lot of a client's fees for something that you don't know if it's possible or not.
That's right, especially since some of the Reg D provisions don't have an unlimited amount that you can raise.
Mm-hmm.
So really the only distinction comes from being able to sell to non-accredited investors. And there's some other things, but that's the big one is, so if you wanted to raise $100 million, it's probably harder to do it. Maybe it's easier to do it with accredited investors. If you have the right offering, you get big allocations of capital from iBanks and other qualified institutional investors. Or maybe, it's probably harder to raise, let's say, $100 million in $1,000 increments from all of these various people. Plus, if you do that, then you come up against, there's something called regulation at Section 12G of the Exchange Act, which says that if you raise more than 10 million if it's 10 million in assets and more than 2,000 investors, you need to register with the SEC anyway and become a reporting company. So Reg A Plus doesn't have a lot of benefits over Reg D anyway, because it has this 2,000 person limitation that you're going to get if you're trying to get $100 or $1,000 from a million different people. So it doesn't seem to have a lot of benefit in this context.
Mm-hmm. Well, thank you. This has been very educational to me to talk with you. You have such a high level of expertise in this area. So thank you very much. Is there anything else you want to add?
No, I love doing this. I'd like to, we should do it again, Sasha. I'd love to.
Anytime.
And I'd love to sit down and ask you, what's on your mind lately? You had some questions for me, but like, what's going through the brain of Sasha Hodder? What's the biggest question that you're encountering these days?
A lot. I'm enjoying learning around these STOs, but lately I've just been working on a lot of contractual, I'm writing contracts for people. That's a lot of what I'm doing. And then the money transmission stuff. And I just actually got a job looking up the European money transmission. It's a client that we already got him set up with FinCEN and going in a couple states in America. And now he wants to branch into Italy, Australia, Spain, and he has a really great opportunity to do so if we can get him set up there. So that's this week is really deep diving into the European regulations, which is
this sounds like stuff. I candidly don't know the metes and bounds of all those regulations, probably to my peril.
Well, a lot of them are written in the other language, so I have to use Google Translator. And I'm sure it must be out there somewhere. Maybe if someone's watching, they can show me a link where it's all very beautifully detailed. But
so what do you think is going on with the money transmitter rules in the crypto space? Because we try to focus on this industry. And I think we were talking earlier about the Lightning Network and some of the other. What are some of the boundaries that you're testing with the money transmitter rules?
Well, this is just theoretical with the Lightning Network, and I don't understand the technology of how that Lightning transaction works exactly. But there is an issue if they are holding the money, if the channel actually has custody over the money, then that would create a money transmission issue. So the whole network would be kind of useless if that were to be determined that they required a money transmitter license. So hopefully it doesn't, I don't even really want to talk about it.
Don't give anybody that idea.
Exactly. Yeah. But I mean, it's already out there. It's being discussed. And
right.
Some people say that, they do have custody over it. And then others say that you don't. The channel operators are not able to actually they might have the Bitcoin in the Lightning channel, but they can't take it out. They don't have the ability to move it into their own account. So then again, it comes to that definition of what is custody, how do you own this thing? And I guess that needs to be settled before they can determine whether or not it's required for these transactions. But I think at the moment, the Lightning Network, people aren't putting big amounts of money into it. So even with FinCEN, they have a $3,000 limit where if the transactions are less than $3,000, I think in a 30-day period, you're not required to do a lot of the reporting. Now, it's still good due diligence to do it anyway, because you need to catch if someone's doing like structuring or doing, $100 at a bunch of different locations. So you still want to be able to capture that information for a good compliance program, but it's not actually required by FinCEN. So if people are doing smaller transactions in the Lightning Network, then that might be another workaround.
Well,
But
it's
then there's,
interesting.
oh, sorry.
No, it's interesting because there's criminal penalties attached to money transmitter rules. It's very disheartening to think that the technology of, for example, the Lightning Network may cause someone to be a money transmitter, even though the software doesn't allow them to, it doesn't provide them with the tools that they would need to comply with the money transmitter regulations. Like, so who knows whether, for example, the Lightning Network even has, and I don't think it does. I think it's, I don't want to say it's anonymous. I'll stop talking because then I'll show my ignorance.
It's anonymous, or it can be, yeah. Although there's one company, I think it's Bitfury, that's actually tracking the information. So the rest of the Lightning community is saying, what are you doing? Like, you're ruining the anonymity of this if you're going to track and report every wallet that goes through it, because that changes the whole integrity of using it if there is like a capability of someone like Chainalysis to go through and link all the different wallets together. So, and then there's the question, those OFAC addresses were banned to Bitcoin addresses. And so if FinCEN has that $3,000 limit, the OFAC doesn't have a limit on, like, you have to catch this. You can't do a $1 transaction with one of those addresses. So it's pretty impractical right now for existing companies to try and comply with that OFAC rule. But I mean, there's a big consequence for going against it. So it's, I think the SEC rules we've been looking at, they kind of make sense to me anyway. A lot of people would argue that no, there shouldn't be any regulation of the ICOs, but I'm kind of on the side that the SEC has taken it cautious, and they've given us a lot of information to go off, and same with the CFTC. But the tax side and the FinCEN side are more heavy-handed with their regulations, and they haven't been enforcing them. So it's more gray.
Well, they definitely don't enforce them on mega banks like Deutsche Bank and everything that gets launders like $100 billion in drug money or whatever it is, and that's the sad thing. I mean, I'm a real libertarian at heart, and I'm a lawyer, and that in some respects hates laws.
That's how I feel too.
So I see these technologies, and I go, on the one hand, you need to advise people to be cautious and to comply with the law, but at the same time, I'm secretly rooting that the technology gets away from the regulators, and really, because I think we're dealing with technology that has, more than anything else in the history of the world, the ability to create freedom. And so I think that's one of the most exciting things for me. And I hope that the software developers can create anonymity and transaction malleability in a way, privacy, that, because I look at it like, for example, the technology that underscores Bitcoin and the software that underscores Bitcoin has the potential to just create so much freedom in the world. But the same technology used by central banks can be the greatest tool of oppression that we've ever seen. And so we really need to, the community really needs to work very hard. And I'm not encouraging anyone out there to break the law. But I think the future of humanity, and this isn't it may be an exaggeration, but I think the future of humanity in a way really depends on everyone in the crypto community being very smart and doing their thing.
Mm-hmm. Agreed. Absolutely. Yep. Thank you. And probably people know where to find you, but just in case, and I'll have it in the links, but how can people get in contact?
My office is out of San Diego, sunny, beautiful San Diego, California. You can reach me at william@restislaw.com. My website, you can read about me, and hopefully I have time to update things because there's a lot of projects, and I don't put all of my projects up there or write as much as I should, but is at restislaw.com.
Excellent.
And
Thank
I
you.
really appreciate it, Sasha. I hope we can do another one of these. Hopefully, Tone gets the Bitcoin Law Review up and running again. He can only play so much poker.
Yeah.
Brings us back.
Agreed. Yeah, my audience is a little smaller than Tone's audience. But I really appreciate it. This was an excellent conversation, and appreciate your time coming on.
Yeah, let's do it again soon.
Great. Thank you.
Bye.
Bye.